Welcome back to the podcast. This episode, we are joined by Mr. Arun Chandrasekaran, Head of Energy Investment Banking at National Bank, a TSX-listed financial institution with a market cap of approximately $43 billion. Arun has over 20 years of experience in investment banking, including roles at National Bank, Stream Asset Financial Management, and Tristone Capital. Arun graduated with distinction from the University of Alberta with a Bachelor of Commerce Co-operative education degree. Among other things, we discussed capital markets, avoiding consensus, and why the life cycle of Canadian energy will continue. This podcast episode is powered by ATB Capital Markets. ATB Capital Markets provides financial solutions and strategic advisory services to help businesses thrive. With a track record of successful deal execution, ATB is a full-service investment dealer with a deep understanding and commitment to the industries it serves. Visit atbcapitalmarkets.com for more information. Good morning, Mr. Arun Chandrasekaran. Thank you very much for doing this. I really appreciate your time.
Thanks, Trevor. Thanks for having me. I really appreciate it.
I have a feeling I just butchered your last name, but I did my best. So
You are not the only one to do that in town, but I wear it proudly.
You are the Head of Energy Investment Banking at National Bank Financial, for anyone that is listening, but maybe just to give color on that, what does that mean for the listener?
Yeah, you betcha. Fortunate to run a group of around 28 professionals out of Calgary dedicated to energy, as well as, we've got 100-ish professionals across our various platforms, from lending, sales, research, commodities in town. So all dedicated to energy, the biggest dedicated energy team in Canada. And I get to lead the investment banking side of that equation, which has been super positive, super fun. We're involved in M&A, equity raises, and advice to clients on a day-to-day basis.
Corporate finance in a nutshell.
You betcha.
You've also been recommended by more than one guest on the podcast, so you must be doing something right.
Yeah, I've got great friends and clients in town. So Barty Staples obviously has been pushing me on this one. And as well, Jerry Greenall was another big push for me to do this podcast.
Finally, our paths crossed. So thank you very much. I really appreciate your time. But maybe to get into things at the beginning, how did you get into banking and energy banking, and why?
Yeah, interestingly, so I grew up in Fort Saskatchewan. I went to the U of A. My career plans were always, to be honest, be a lawyer. I really liked Perry Mason, watched it with my parents. And so that was my actual trajectory that I thought. So I thought I'd do business first and then jump into law. Once I was in school, I realized I didn't want to do school and I wanted to get into the working world. I had a great friend of mine, a couple years older, that I grew up with, that said, hey, listen, you're doing finance, get into investment banking. You will, one, learn the most, and two, make the most money. And so that was my drive. I didn't come from much. And then I, sat there and said, listen, let's do it. So that was kind of the push. I'll be honest, I went through those interviews. I didn't know what investment banking was. Some days I still don't know if I do, but equally fun fact, it came down to my last interview. I went through most of the banks. They essentially all turned me down. And it was my last interview where I finally got a banking job. And I had kind of resigned to the fact that I wasn't going to be an investment banker, but National Bank hired me. And that's actually where I started my career, despite a couple moves through time.
So it would have been around mid-2000s?
It was March 2004 was my first day.
Coming from Saskatchewan?
Fort Saskatchewan. Sorry, just outside of Edmonton.
So you came down to Calgary and looked for jobs?
Absolutely, yeah. School at the U of A, and then right down to Calgary. I had been fortunate to have a co-op job at C&Q, where I really got to learn the energy industry, oil and gas specifically. I worked on their marketing group under a guy named Wade Strand, my first mentor in the business, and really got the lay of the land. And then out of school, took the opportunity to get into banking.
The first years of investment banking are tough. You work long hours.
It was horrible. And we were busy. Those times were pretty crazy, where you're in trust sector days, tons of financings, lots of M&A. It was very, very busy, lots of all-nighters and true all-nighters where didn't go home, just the next day, splash some water on your face, do up your tie and come back. Man, I remember sleeping on boardroom tables. It was, they were tough. They were tough times. Lots of days where I didn't think I would for sure make it through.
Did you ever think about quitting?
All the time.
Did you, what was your plan B?
Didn't really have one outside of, you saw a very big corporate world, obviously, that you could join. But that being said, I had lots of good advice through time of stick through it, stick through the tough times. It does get into greener pastures, even, within the career from being a young analyst to associate to VP. Every position adds, not only seniority, but it adds a degree of client interaction. You're trying to build towards the advice side and out of just the math side. You find when you first start this business, you're just completely drinking through a fire hose and you're trying to learn everything, right? And the first fact was true in terms of learning more than you could in a lot of other places. It was very true. And it can be overwhelming at times. But like I said, I had lots of great people through time helping me through it. And I stuck with it.
And it's paid off. You're the head of energy banking now.
Shockingly.
So.
Shockingly, they've trusted me there. I like to joke that I just outlasted everybody else that went and found better jobs out there. But no, it's been great. What I found, especially again, getting into senior levels, was I really enjoyed getting in front of clients at such a young age. It's a great part of our business, to be frankly honest. Those clients becoming friends is the next great part of our business. And then finally getting into that role where you truly get to, provide your advice and opinions and help. Like that's the biggest thing. We're here to assist. The clients that we have are the smartest people in the business. They know their businesses far better than I ever will. But what I can do is provide advice, but also provide a platform to help in a lot of different ways, from analysis to debt capital to raising equity. All of those various functions is what we do on a day-to-day basis.
Do you remember your first day of investment banking?
I do. I didn't drink coffee previously, so I had my first coffee. I actually went down the chai latte path, which led to about 15 pounds in my first 45 days of work. So that was a pretty awesome move, but I was pretty skinny, so I could use the weight. I was quick to understand everything I learned in school. I could throw out the window. Everything was now different, even from simple as net debt calculations all the way to how we truly look to value companies, how we look at investment thesis, M&A analysis, etc. It was kind of ground zero in terms of learning. And then, like I said, I'll use that drink from a fire hose. It was lots. It was lots to take in, but I worked with some awesome people right out of the gate that definitely taught me the ways. In my first 6 months, all the juniors around me quit. So the next most senior person was my vice president, Vanessa, which actually just created more of a learning environment for me, where I was kind of forced to learn from more senior people and then learn a lot of the grassroots things myself, because again, I didn't have a lot of the juniors around me. So it ended up working out really well.
From National Bank, you went to TriStone. What led to that move and why?
Yeah, so National was great out of the gate from a trading ground perspective, but what I saw in TriStone,
and what was TriStone?
So TriStone was an energy boutique in Calgary, focused on, again, 100% focused on energy. Actually had offices at its peak around the world, and so TriStone was this place that was very rapid growth. They had transformed, I want to say, the A&D landscape. Watrous and what he had done really started it from kind of a very defined technical process. And I feel like TriStone really carried that on. And with that, they had a lot of transactional experience. And so I looked at TriStone as an interesting learning ground to not only deal with some of the bigger companies, but to deal with the small cap and the growth entities, to be very involved in the sell side trade. So I really just want to get into as many transactions as possible. So I made the move over to TriStone, call it in 2006, and worked still to this day with some of the best people I've ever worked with. Great platform, great people, extremely active, and yeah, a ton of fun.
At the time, you would have had First Energy, TriStone, Peters, TPH was going then.
TPH was not up here yet, but nope, the rest were here, as well as some of the other smaller guys, the Core Marks, the Canacords, etc. Yeah.
So there was more than enough work to go around.
Yeah, there's lots. And again, I think we made our difference for sure on the technical A&D side. But yeah, it was just a great collaboration of awesome people that really worked well together, respected each other, had a full sales and trading desk in town.
Hmm.
Yeah, it was pretty awesome.
Then where'd you go from there?
So from Tristone I bought my quarry, and I kind of decided that, I just didn't want to be part of a big global international, to be honest. And so alongside a couple others, Tom McInnes being a big one, we worked together at Tristone, and, he kind of poked me and said, hey, I'm going to go over and join this national franchise, which obviously I had been at previously, but we're going to redo it. We're going to make it, more junior companies, more growth companies, and really align with a lot of the lending that National was doing at the time. So Sandy Edmondson was running at the time, but me and Tom went and joined that franchise and really grew it from there.
Fast forward to today. Last handful of years have been harder in the sector, not as much business to go around. In your opinion, what has allowed the National Bank financial franchise to grow and remain and keep going? What have you guys done to keep things afloat?
Yeah, it's a good question. Consistency, I think, is a big one. I think first and foremost, we're a Quebec-based bank sitting in Calgary, Alberta. Up until recently, we had, call it 2 branches in Calgary, before in the province. So, not a huge, call it commercial footprint, but capital markets wise, investment banking, and specifically energy across the financial spectrum has been something we've really focused on. And so what we've done over the last few years is really, again, been stable. So we had been here, I've been here for a long time, 40, 50 years, but we've had a lot of volatility. So even things like COVID came up and, we made a push and a concerted effort to not just not retract from the sector, but to put more capital forward. And so I've had a really big push on growth across the private and public sector. I think we need it all because you want the life cycle to continue. Capital is the lifeblood of energy companies. And so pushing that forward and making sure that, again, we had certainty for our producers and our clientele that we're not going anywhere. And I think that has been extremely helpful, to be frankly honest. And then being coordinated, like I said, not just across IB, but all of our different platforms, having leading edge sales and trading, commodity efforts, top class research. And then, like I said, a top class lending franchise that's very aligned with what we're doing on the banking side has been extremely positive. And then I think that's differentiated ourselves from potentially other banks that have been a little bit more volatile in the sector.
So in the dark days of COVID, when oil goes to below zero, maybe March, April of 2020, on those days, what do you do? What do you do when you go to the office? How do you weather the storm?
Oh, well, on the dark days, it was scary. Number one, you couldn't go to the office. When it first kind of came down and oil hit its lows, we were stuck at home. That didn't treat me very well. My wife did not like me at home, that's for sure. So I was very quick to come to the office, even when I was by myself for a long time. But, interestingly, when I looked at our portfolio coming into COVID, it was very strong in terms of we had awesome clients that we were supporting. We had awesome clients in the lending book. And despite low commodities, we had no fear factor, to be frankly honest. We knew that this was a point in time effect. And everybody has to react to that, obviously. And, it does hurt your psyche, et cetera, to see $30 oil and see share prices at, call it all-time lows. But I really felt that the portfolio was resilient. I didn't feel like we were going to have any real problems, things that were problems already, 2-3 names in the portfolio were clearly going to be problems into COVID and into that oil price environment, but they were already there. And so outside of those, I felt very good about it. I had a call from my boss at the time saying, listen, what do you think? And I was pretty calm about it. He wasn't at that time because, again, he was faced with obviously staring at a commodity price environment saying, hey, what should we do here? I remember clear as day. He told me that day, it's the only time my boss at the time has ever yelled at me, but he yelled at me pretty good in terms of, I want to see a real plan. And he was under a lot of pressure. And I gave him 2. And I gave him 2 within 24 hours. One where we could cut a whole bunch of people and we could cut resources. We could cut capital. And I said, listen, we can do this and I've made this plan, but I'm not going to show it to you. I'm going to show you this plan. I'm going to show you a plan where we grow. I'm going to show you a plan where we do more in this space. I'm going to show you a plan where we hold our clients together. I'm going to show you a plan where we put more capital to work over time. And this is going to be a bump in the road on a commodity, but the world needs energy. The world needs oil and gas. This is going to bounce back very quickly, and we'll be fine on that side of the equation. And he never asked to see the cut plan. He was very much aligned with me, and I continued to build from there. And, we were already in a place where we were growing leading into COVID. And like I said, COVID was, kind of a blip and something we had to react to. Don't get me wrong. But energy resilience is something that this city definitely has. This isn't the first volatility we've ever seen. And I was very clear to put that we were going to grow through this. And I think we have. I think we've done a very good job of not only growing our energy book, but growing our clientele and showing that we're here to support.
To what degree did you feel it was important to stick with your clients through the lows?
Absolutely. I think that's what they're looking for. I think that consistency is everything. It's the tough times where I think you can truly show your colors, not just on the investment banking side, but as a franchise, to be honest. And I give full credit to my partners out east, to be honest, that didn't only trust in me and the strategy, they trust in the city. They trust in what our clientele is doing. Our clientele has been here forever, doing really great things. And I work with some of the smartest people in the world on a daily basis. And, to have that trust from a whole bank platform perspective, but equally for those clients to see that, I think was very important.
There are other investment banks out there that are smart. They're good listeners. They provide capital. They're there for their clients, basically all of the above. To what degree do you view creativity as important in deal making and supporting your clients?
Yeah, I think it's extremely important. I think it's creativity. It's being in deal flows today, because this year is different than last year, which is different than the year before. And so making sure that you're busy in the context of a market and a unique market, because every month and year is unique, is important. And then to translate that advice back to your clients is equally important. So creativity for sure plays a piece. It plays a piece in making sure that, what we can add to our clients who are extremely smart about their businesses and business plans is the have you thought about this, right? And making sure that, we're always bringing not only the question, but ideas to the table, which it creates that brainstorming, creates the thought into strategy as, entities go through time. So I do think that it helps. And listening. I think that that's the biggest thing, right? So what are clients actually looking for? Don't give them something, or don't be creative around something they're not even looking for. That's not helpful. Listen to what people want to do, what their business is. Like, don't go tell a royalty company to go acquire barrels tomorrow. I mean, that's not going to be very helpful, right? And so, I think you want to be thoughtful to the business strategies as well that our clients have laid out, and how can we help and augment that and make them the best companies possible. That's what we can add.
Sometimes there's a difference between what the companies want to do and what the market is requesting. In that scenario, how do you deal with that? What do you say?
Yeah, that's a really good question, Trevor. My number one point is I actually do believe that our clients, public market entities, as well as private market entities, hey, you're the smartest at running your business. And equally, for the most part, you own a substantial piece of your business. And so, some of the CEOs in town own very big percentages. And so with that creates alignment right away. And so I always look at these leaders, the management teams, and the boards that support them as, you are the smartest people to run your business. And so sometimes you might need to run your business in a way that the market may not look at today as positive, but over time, they'll very much understand. And so we've seen lots of negativity to initial announcements over things. But, 6 months from now, a year from now, once you've actually executed on that plan and what you saw as that strategic value has really translated into share price, the market momentum, etc. What you have to remember is often the market is looking for the short-term reaction, not the long-term. Whereas the people that run these businesses, they're long-term incentivized, right? They're not selling their stock on a daily basis. And for the most part, they're adding stock. And so their liquidity event may not come from years in the future. And so when they're making business decisions as well, they're thinking about the long-term value creation. So again, it's our job when these things happen to explain where negativity might come up, but also how can you counteract that negativity? Is there some of the messaging in what you put out in your press release all the way to how you market to something, and a little bit of equally asking for the market to trust you on some of these long-term decisions. And like I said, the people that run these businesses know their business is the best.
The problem is there are fast money investors out there that want to return now and who also have capital and demands. How do you balance that aspect of the market with large capital providers that are fast money?
Yeah, you can't knee jerk, unfortunately, to short term, and you can't run your business in a way that's not long-term sustainable, is what I always say. And so it's really important for people to think about the long term and not that quick hit, call it. And so it can be like a drug, right? You see a share price go up and you're like, oh, I made the right decision. But you got to remember those short-term capital guys, they're renters. And then there's lots of good quality long-term holders, the Dave Spunkas of the world, that they want to see that true value creation. They're thinking about a 3 to 5 year cycle and not just thinking about, that next response. And so I think it is really important to think about the long term, the short term side of the equation. Hey, that's results, and that's how you execute on a month-to-month, quarter-to-quarter basis. And that is for sure on our entities to set up good guidance and make sure that they're hitting those things appropriately. And again, our clientele does that extremely well. But you can't think about the renters. You have to think about the long-term business. And if you think about it that way, I truly believe that will create the most value.
This podcast episode is sponsored by Conate Water Solutions. Do you need cost-effective water sourcing options to supply your next drilling or completions program? Conate Water Solutions is a specialized hydrogeology company focused on water well drilling, testing, and water management services in Western Canada and Texas. Contact info@conatewater.com or check out conatewater.com for more details. This episode is sponsored by 360 Engineering and Environmental Consulting. 360 is dedicated to shaping a better future by championing responsible development with a forward-thinking approach. As established leaders in the site closure market, 360 provides innovative solutions to address complex engineering and environmental challenges. From safeguarding communities to preserving our planet, 360 is committed to making a meaningful impact at every step. Discover the 360 vision and learn more at 360eec.com. Speaking of incentives, in the old days, the boutiques used to put your own money into the bought deals to create alignment, although times are different now and you're at a larger entity, it may be harder to do that. How do you align incentives with your clients?
Yeah, unfortunately, at a bank, where we'd love to do that, we don't get that same opportunity anymore, which is okay. I think where, a lot of our alignment comes in is, trying to truly align ourselves on the workflow with our clientele and trying to be there from day one, right? So in the tough times, in the good times, trying to problem solve through all of those pieces, not just talking to clients when, things are rosy, right? It's when things are challenging, I think. And, you're right there alongside them trying to figure out and problem solve and making sure that you can offer the capital of, hey, maybe your institution at times and the bank, and being aggressive where you can be aggressive. I think that creates real alignment and franchise alignment with our various clientele. So, across all of our names, we try to become a one-stop shop, but equally with that, we have capital invested from a debt capital side, and then we have institutional capital invested when, we go out and we're aligned with our entities and we're trying to sell that stock, and our sales desk is, really translating to, hey, this is why I think this is positive. I think we are creating alignment towards ensuring we're all on the same page, and again, trying to carry those share prices up, because we want to be smart, not only for our clients and move their share prices up, but we want to be smart for our institutional clients that are buying that stock, etc. So I think we create franchise alignment by being, again, consistent from day one and being alongside our clients through thick and thin.
Showing up to work during the pandemic when everyone thinks soil is done for, pitching deals may be a clue.
Yeah, absolutely. And looking for those opportunities, right? I mean, you're there during those times to also reassure your clientele that things are going to be okay. And listen, we did lots of deals during that COVID timeframe that made people lots of money, as you look through into the future. So that's a big part of it.
Where do you get your most creative ideas? Is it when you're out for a run? Is it
No, I think the
driving
most,
home?
to be honest, is talking to my clients, to be honest. These people are so smart, and I find the dialogue creates thought-provoking and interesting concepts that you can at times take back and manipulate some things and then come back with some ideas. But equally, one conversation with one client might resonate in terms of an idea for another client, right? And so that, as well as my partners across the firm, across the various groups, I think that dialogue is extremely important. And, it might be one of my research partners or one of my sales partners that sees something going on in the broader market and says, hey, have you thought about this? And when I sit back and actually have some time and sit there and say, okay, well, how could I take that idea and, manipulate it for multiple people? That's important. And sometimes it's just as easy as throwing spaghetti at the wall, to be honest, sitting at my desk and looking at the screen and just saying, hey, think about this. And I'm talking to myself, obviously, but that obviously creates some very good ideas through time. And my team, as well. I've got a great team and people that surround me, and we're always trying to bounce things off each other and making sure that we're hearing what each other's working on. I mean, one idea across the office might lead to something that, you can think about in your portfolio. So we're always trying to think across the spectrum.
Calgary's a relatively small business community with a lot of collaboration and exchanging of ideas. But if you pursue the consensus opinion, you'll get average results. How do you create an independent line of thought so that you are not just getting consensus results and above average performance?
Oh, that's a really good question. I've always said through time, I think I'm a pretty good listener in terms of different views and opinion points, but equally, I like to digest all that information. I hate just regurgitating what someone said. And I think that's a trap that a lot of people can get into in this business, especially. And what I learned early on, and it was definitely something I took from a Tom McInnes, actually, early on in my career, was people want to hear what you think. And it might not necessarily be the consensus view, but people want to hear what you think. And that's why we're in the room. And I've always taken that to heart. And equally, I like to say that the mentorship I've had through time has been a lot of different people. It's not just 1, 2, 3 people. It's probably 20, 30 different people that different ages and equally still to this day that I spend time with, I respect. And I like to hear all these opinions, but I do across, at the end of the day, I like to say that I bring my own opinion to the table, but it's taking all these views into play. And I do think that that clients are looking for exactly that. What do you think? What do you think they should do? And that might not be consensus. That might not be what they want to hear, and that might not be what the market wants to hear. But I do think you want to be honest. I think that serves me and everybody well long term, but in the short term, it might be negatively received. But sometimes that's what we get paid for, and that's why it's not always fun.
The capital markets often require one-way decisions, but there's value to admitting you're wrong. How do you balance the two attributes of pitching deals? The fact that you may be wrong, but also the fact the markets are very demanding.
Yeah. So I think that, first and foremost, on our side, we are obviously running a business. We are trying to make revenue. One thing that I appreciate with being active is I'm not here to chase fees. Okay. So, and I think when you can make that comment and just know that we're going to do lots of good business out there and we can give honest advice that might not lead to a deal, and that's okay. But that entity will do something else. Right. And so it's a long-term game for me, not a short-term one. And I think that's extremely important as, you provide advice. If you are just motivated by earning a fee, you're not going to give the right advice. And that's just not appropriate. So telling a company, i.e. to raise money where they don't need money just because, hey, I'm going to make some money and it's available, that's not good. That's not positive for anybody. And that's not good for the market. Our market has been devoid of equity capital. Having that capital removed from institutions when an entity may not need it, that's not positive for anyone. It's not good for the sector. And so thinking about those things, doing M&A just for the sake of M&A, none of those things make sense. I think you have to, again, ensure that businesses are doing the right thing for themselves and that we are helping and assisting those people with their strategies, but not just chasing fees, and be equally, again, willing to give that advice where that is a non-fee paying event, and hope that it leads to good things in the future, right? And I do believe that has always happened, and it's the right thing to do. And you could be sitting there as well. We could be running a bid process, and we might be sitting there around the table and saying, hey, the advice might be to take the top bid. The advice might be to walk away. And you have to be able to be prepared to give that advice and have your client's best interests at heart.
Speaking of good advice, a lot of the best management teams know the deals they want to do already and are ahead of it, kind of in a sense. So how do you provide value to clients where they know their assets better than anybody?
That's a question that always plagues us, Trevor, for sure. Because you're right. Pitches don't often turn into deals. What our clients want to do turn into deals. And so, you know what? Again, what we can offer is one, listening, and two, ensuring that, we give the right views to, again, augment what they're doing. So they might have an M&A idea in mind. How do we capitalize that appropriately? Should we be raising equity? Can we be aggressive on the debt side with something? What are we not thinking about are things that I can bring to the table. Sometimes it's as easy as listening and having a conversation, to be frankly honest. There's lots of deals that, our clients have, done and had fully baked, and then they just call us up to just test a few things off of us. Market reaction becomes some of those comments. And so we're always looking for ways on our side to ensure that we add value, but we're also looking for what our clients need. So we're not trying to, create work for the sake of work. It is really, again, listening and looking for, and the first question I often ask is, what do you need from us? Especially when, to your comment, that idea is already baked and they know what they're doing, and these guys are really smart. So, and sometimes that's challenging because, again, you work with some really smart people around town, but equally you're always looking for that place where, and there is always places where we can be effective on information or things we're hearing or things that are happening in the market that could affect, certain deal criteria.
Have you seen examples where a single relationship can really turn the tides for a company, where someone company A that knows someone company B, and a phone call really set things up?
I think relationships are what's great about Calgary. Okay. And that comes from when I first came to Calgary, first had my first job and came into my first meeting, I was always welcomed, right? And even at an extremely young age, to sit and be able to sit in front of CEOs and management teams and them know your name and butcher your last name and then make a joke about it and, and build these relationships is great. There's nothing like it. And so there's no city like this where you have that interaction, to be frankly honest. And so all the way to exactly what you're talking about, where CEOs in this town, they know each other. They trust each other. They respect each other. Bankers in this town know each other, respect each other, and vice versa. And so, like, when we look at, we just had an energy conference here a couple weeks ago, and we have dinners, and everybody loves hanging out with each other. And that's what's great about Calgary. There's competition, obviously, behind the scenes, but at the same time, everybody respects each other and everybody wants to hear how they're doing, how they're thinking about the business, how they might be thinking about things operationally. So there's a lot of sharing of information. And so when it comes to deals, etc., relationships help. It makes things seamless. There's no question. And that might be for sure on the banking side, where I can assist and say, hey, I know that person really well. Let me go in and test this concept. Or to CEOs knowing each other. A lot of deals in this town have happened by two CEOs sitting down and saying, hey, we should do these for the right reasons. And, it might be an asset sale, it might be a corporate sale, whatever it might be. That happens all the time. So it's been a fantastic piece of our business. And it's unique. It's unique to Calgary. I have a good story where I have a buddy of mine that I grew up with, same one that told me to get into banking, and we grew up together in Fort Saskatchewan, but he's out in Toronto now. And he came to town with his family and said, hey, we're going to stay with you guys. And I'm like, great, we're around. But on Friday night, I've got this event. I've got a friend of mine and he's turning 60 and I'm going. And he's like, sorry, what? What do you mean you have a friend that's 60? And I'm like, oh, no, he's a client, but he's become a really good friend and we do a lot of stuff together. And so, I got invited to this party. So, me and my wife are going, and it was mind boggling to him. He had he's like, what are you talking about right now? And this guy that's, same business, investment banking, covered clients his whole life. He's like, I don't have one client where I have a relationship like that. Like, I have no idea what you're talking about. I'm like, oh, this is Calgary, Alberta. That's why Calgary's awesome. And again, it's, friendship is one thing, but, you still have to translate that in the business side to advice, et cetera, and make sure that you are very helpful with these people.
Yeah. The problem is one of the best ways to make money in business is to buy low, which means buying the company when it's vulnerable. So how do you balance that aspect of the business where company A needs to buy company B when company B does not want to sell and the relationships are tense?
Yeah, listen, sometimes, let's just, number one, may not end up in a transaction. But number two, there are times in this business where you for sure have to separate from friendship. There's no question. And like I said, close ties, close relationships. And I do think Calgary's really great about this is, hey, I've had tense conversations with lots of people that I call friends and clients, et cetera. And that's the same thing as you get into CEOs, et cetera. I still think that there's a respect factor. So when you get into those transactions, et cetera, hey, listen, number one, there could be a relative value game. Hey, you're taking equity in a pro forma entity that makes a ton of sense. And so that's something where we can be helpful in translating that message. But you're right. There's definitely going to be those situations. We saw some of those in COVID for sure, where, things were at all-time lows. People felt stressed. They felt like they were being forced into decisions. And, ultimately, it did lead to some sales that probably people didn't want to make at that time. It's a tough part of our business. We've had those situations for sure through time. We'll have more of them. And I think the biggest thing is to do everything respectfully.
By definition, your clients are big fish who know what they're doing. So in the cases where the client's doing something that you don't think is right, how do you approach that situation? Because you've seen a few things and you know a few things. How do you think about that?
I always have seen people do appreciate honesty. The initial reaction might not be what you're looking for. And we're still all humans. And so it takes time with some of these things to digest, et cetera. I've had lots of, call it tense conversations where I've had to be honest and it's not what somebody wants to hear. And hey, I always think that dialogue is helpful in the end. And it may not change somebody's mind, by the way, but it might augment their view. And so that's helpful. Or it might completely change their mind. And so all of those things I think are helpful. I've had lots of clients over time where it's like, yeah, I didn't really like what you said at first, but as I thought about it, okay, it makes some sense. I think it's helpful for people to hear these things. It may not change how they're going to proceed with something. And I'm not going to be 100% right, by the way. It's just my advice and my help. And to your comment, what I may have seen, et cetera, that's providing or leading to the comments that I'm making. But it is meant to initiate thought. And that's what I'm here for. And if I'm not doing that, if I just come in and tell somebody what they want to hear, I don't think I'm doing my job, to be frankly honest. And I don't think that that's why I'm at the table.
You're not that old yet, but speaking of seeing a few things, what's one red flag that you've noticed through the years on a company that perhaps isn't going to stick around for a while? Is there something that sticks out?
Oh, man. That's always a big one, to be frankly honest. I mean, it's something that now, if you have an outsized debt to capitalization / debt to cash flow versus the broader market, broader sector, your peers, and something that is just not sustainable, I think that is typically a red flag for sure, that we're always looking out for. Again, our sector has become very smart about living within their means, especially on the debt side. And so you see that less and less of a problem, but it's definitely a factor for sure to watch out for. And then, outside of that, it's just making sure that, at any time, entities aren't putting good money after bad, right? So listen to your results, right? And when results are good, hitting type curve and above, et cetera, that's great. Like, you might have an acceleration of program, et cetera. If they're not, and, you're under it, but you continue to say, no, it's going to be the next one and the next one and the next one. That's sometimes a red flag for us for sure in terms of, again, that putting good money after bad, wait, maybe pause, understand these results a little bit better before you put your next capital program together. We work with a lot of private companies too. So you see this a little bit more in them where they're more organic growth and starting from scratch, right? So you see a little bit more of that development occurring through time. But I mean, when I look at companies in general, we have, call it 3 pillars, which are people, the assets, and then capital. And you want all of those things working together, to be frankly honest. And when you see something dipping in any of those criteria or segments, you at least have to ask the right questions.
This episode is brought to you by Upgrade Labs. Upgrade Labs offers a comprehensive range of cutting-edge performance and recovery services that have been proven to optimize your health in minutes, not hours. Whether it's accelerating muscle mass and bone density or addressing injury and inflammation, start your experience by booking a free cell health analysis at upgradelabs.com/Calgary. This podcast is brought to you by Energy United. Energy United is an organization with a mission to promote practical energy policy across Canada. Energy United is building a community of Canadians that are passionate about Canada's natural gas and oil industry and are willing to take action. Energy United is driving change on issues that matter, all the way from the carbon tax to the emissions cap. Join Energy United to make a difference at energyunited.ca. Today is January 21st, 2025. Biggest challenge to the Canadian energy sector as of today, and then on the flip side, biggest opportunity.
Biggest challenge is continued volatility. So we are looking for a bit of consistency in Canada. So what we've seen, and it's really been something that has been substantial over the last few years, is political and regulatory pressures and inconsistency, to be frankly honest. And so that's created volatility in our broader energy space, which has created lack of investment and institutional investment. And that's Canadians investing in Canada, so our Canadian institutions, our pensions, etc., but also international entities saying, why would I invest in Canada? Like, you look like Nigeria to me. And so I don't know what the rules of the game are. So if you don't know the rules, would you put your money to work if it can change on any given day? And so that has been our biggest challenge. Now we see a lot of tailwinds right now towards potential consistency in a lot of those things. One, it's not just the political regime, but it's consistency in policy, consistency in regulatory. It's looking out for Canada first. I think that's big. And then that leads to that institutional investment, which leads to stock prices up, multiples up, and that's positive. What's the biggest thing that we have going for us is this is still early stage. The world needs energy. The world needs more energy. The world needs all forms of energy. So it's not just oil and gas. It's other forms of, call it, transitionary elements. And it's not transition. We need all of these different energy sources to continue and to grow, to be frankly honest. But we're not going to languish on the oil and gas side in any way. These things are going to be required, and they're going to be required at substantially larger volumes, especially when we look at, call it global demand. And so with that in mind, Canada does it the best. They do it the cleanest, and we have a lot to offer. And so if the political and regulations can help us promote all of those things, I think that's going to go and serve us all extremely well. And like I said, we're at a place where we are underinvested from an institutional side. There's a lot more gains to be made and a lot of growth to be had out of this sector. So it's an extremely positive time to be in oil and gas.
Maybe one way to phrase it is the political uncertainty and the lack of capital and tough times from the Canadian energy sector the last, say, 10 years may be the opportunity in the windshield going forward.
Yeah, totally. 100%. And like I said, we have the smart people in this town. We have entrepreneurs in this town. They built, big energy franchises. They're going to be the leaders as well on new forms of clean fuel and new forms of clean energy. A lot of those things are going to be born and bred out of Alberta and Western Canada. And I believe that. And so with all of that, there's a ton of excitement out there. And I think that, like I said, we're on the early innings of that, not the late innings. And so it's exciting. It continues to evolve. We've had places and points in time where we've had real political bodies, we've had real heads of state say energy's dead. I mean, that doesn't help us, right? We need the product on a day-to-day basis, and we need more of it on a day-to-day basis. And so I think some of that rhetoric is starting to change, to be frankly honest, and that'll be helpful as well to have that consistency at the federal and provincial levels, as well as heads of state in Canada aligned with heads of state in the US. And so together, again, like I said, I think there's a lot more to be done here and a lot of excitement behind all of that.
However, the difference between positive sector tailwinds and rising production and the reality of running a profitable business is one that exists at times, like in the shale revolution, where a lot of people didn't make money. How do you approach that subject where, although production levels are rising, at the end of the day, you still need to run a profitable business?
Yeah, absolutely. And I think that where our sector got capital starved here for a long time, one, more limited access to debt, two, very limited access to equity. We've seen, the least equity we've ever seen in our sector over the last 5 years. And so with that, entities have had to live, like I said, within their means. So a very curtailed balance sheet and cash flow that they're generating on a day-to-day basis. And so a lot of the growth kind of came out of our sector, and entities, again, have been fixated on, like I said, sustainability and long-term sustainability of their businesses. So all that to be said in terms of everything from capital programs to picking wells, et cetera, and the science that goes behind it has really dovetailed very strictly with economics. And so I think that for the most part across the board, that our entities are very thoughtful to exactly what you're saying. And so they're not going to just rush out and grow their entity for the sake of growing their entity. They're not just going to jump on a treadmill that isn't long-term sustainable. They're not just going to have a return of capital that is too big that they can't sustain from a long-term perspective. And so all of those things and all those factors are coming to bear, I think, as these entities and as our clientele are making their decisions, and they're being really smart to it. And they know that at any given day, we don't know what's around the corner, especially in our commodity cycle. And it's not going to be all roses, by the way. We are going to continue to have volatility this year, next year, and the next year after that. And so I believe that our space has become extremely thoughtful to all of those things, inclusive of those capital decisions. So they're putting this information in front of investors.
What does bad advice look like to you?
Bad advice is dishonest advice, or advice that is chasing a fee, or inherently just, like, again, not being in the best interest of that client. And so that's the biggest thing, to be frankly honest. For the most part, it's equally not listening, right? It's not listening to what somebody is saying to you and, trying to move them in a direction that is more self-serving. So don't be self-serving. Think about your client first and think about their interests and their business plan, and be thoughtful.
M&A in Canada, Canadian energy,
Yeah,
will continue. And do you think it'll help catalyze prices if there's less companies?
I think M&A will always continue in our sector. I think it's important to our sector. I think that what we want to continue to promote is the life cycle of entities. So we don't have a robust public realm if we don't have a great private realm as a starting point. We don't have a great private realm if we aren't starting new companies on a week-to-week, month-to-month basis. And so when I look at some of the best organic development being done out there, it's happening in our private sector. It's happening on a daily basis. And we need these entities to continue to take risks that, some of our public companies shouldn't be taking, to be frankly honest. We need mid-sized companies in the public market to take on acquiring some of the junior companies in the private space or the public space, something that might be too small for our bigger cap companies to take on the job of doing, because it does take a lot of effort to integrate these things and put these style of businesses together. And then we need the big businesses to be able to acquire the mid caps over time, right? And so that's where I come back to the life cycle, which becomes important. Do I believe that M&A will continue? Absolutely. We continue to be a liquid market, and that's positive. I think that institutions, they want to see larger entities as a whole, but at the same time, you need all of these style companies to ensure that you can have some of those larger beasts. So yes, it will absolutely continue, and it'll come in different realms too. It won't just be corporate deals. It won't just be public to private. I think you'll also see select public to publics. I think you'll see private to privates, and you'll see lots of asset deals happen over time as well. And I think that's equally helpful, right? So you often have transactions where X buys Y, and then they sell the bottom 10% of their portfolio and things that they're not going to spend time and capital on. And then you have someone else that picks that up, and that might be in the private sector or the public sector, and they take something that was undercapitalized and put capital to work on it. And then all of a sudden, that asset is something that trades hands again in a couple of years. And so we've seen a lot of these things occur through time. It's what makes Calgary great. It makes the energy sector great. There's been lots of assets I've sold multiple times in town. There's been lots of corporate entities that I've sold into one entity and then I've sold the bigger entity. And so, I think that all of that, like I said, creates and promotes the life cycle of oil and gas, which becomes important. And we need capital through all those pieces as well, that's where national focus is. Our time and effort is not just on the big companies, but equally the small ones, private or public. And so that we always have this life cycle continuing, which again ensures that we have a robust sector.
Do you see, or do you think more capital is available for that life cycle to continue, or is it chicken and the egg sort of thing?
No, it's coming. I think there's an excitement factor out there on what's going on. Like I said, not only in Canada, but this push towards consistency on potentially the political and regulatory front. And I think that that's important. We've seen already, to start this year, a real push, not only on Canadian institutional capital, but private equity, and specifically private equity of the U.S., to be frankly honest, that really wants to put their dollars to work up here. We've seen that over the last couple of years where they've really had a resurgence of capital back into the space. And I think that that's only going to increase, to be frankly honest. They also have a very powerful dollar that they can use to their benefit. But all of these things are extremely helpful to ensure that we have entities that are well capitalized. You also need the people, right? And so at times we even feel like we have more capital than people in terms of new startup entities, et cetera, because there's a risk factor there, right? Especially when you have a volatile sector, having people wanting to leave a bigger job and a stable job to take something on a little bit riskier is sometimes more challenging. But we're seeing entrepreneurs start up every day, and I do believe that there's capital for good ideas.
Right now, there's a 30% advantage coming up north from the States. From your perspective, do you think American buyers are inevitably coming up north?
I think there will always be a lag on the true American buyer. So they've been tricked and fooled in the past, and it comes back to the political regulatory environment. And so the biggest pushback we've definitely had over the last couple of years is I don't know what the rules of the game are. And so for me to put a substantial investment into Canada is challenging because that might change in 6 months, a year, 2 years. And I don't like that. And I don't know if you are pro industry, pro business, pro energy. And that's been a real question, from a lot of these entities. And so to that end, they've been watching, they've been waiting. We've definitely seen them poke their heads up more and more, so specifically over the last 18 months, but from an understanding perspective. Now, more recently, we've seen, entities, and Novant's a great example of doing a very large investment, and they obviously had a platform up here, but great to see a U.S. domiciled entity that has assets on both sides of the border wanting to grow their platform up here. Will you see other names follow that don't have a platform up here? Yeah, I think it takes time. I think it takes time for them to feel that they have certainty. They know the rules of the game. They know that the investment thesis is astute, and they know they're not going to get burned by it. And those things take time. And we're still fraught with, a federal election that needs to happen and needs to occur. And then post that, what do policies look like? And I think that you're not going to make those investment decisions ahead of something like that. And you're not going to make those decisions immediately post that. It's going to take a little bit of time, which I understand as well. And then they are looking for size and scale, right? If they're going to come up here, I think that they want to see that size and scale. But for sure, more conversations than we've had. We've had more conversations recently, than we have over the last kind of 2 years.
One comment may be that although a conservative majority appears to be coming down the line, in 4 or 5 years, we don't know what's going to happen. You may be back to square one with Canadian federal leadership.
Yeah, I think that's where, again, you need some time to pass. I think you need that consistency, and you need to see what a new government is really about, to be frankly honest, and what are the policies that they're going to put forward, and do we have that consistency over the longer term? And it's, again, what we've just been, exposed to was a knee jerk to policies and regulations that really went extremely off the spectrum, to be frankly honest. And so we swung a pendulum. And I think that the world wants to be right down the middle. And even if you have a change of government, you're kind of feeling like you're right down the middle. And I think Canada was that for a very long time. And it was a place where people felt was a true safe haven for investment. And we truly saw that international investment. And I think more recently, specifically probably over the last 6 to 8 years, they have not felt that way, and they've taken their money elsewhere. And so our pension funds have taken their money elsewhere. So I think we have to read and react to that. And once we start to see, again, a consistency in all of these things, I think that money returns. And I think that money returns in droves, to be frankly honest, because there's great investment ideas and a great investment thesis in Canada. There's no question about it.
The federal liberals of the 90s were maybe a little bit more in the middle and wasn't so crazy.
Yeah, exactly. And I think that that's where we were for a long time. I think that there was a time and place where the Liberals and Conservatives were very, very interchangeable in Canada on a federal level. It hasn't been recency bias, obviously. So we'd like to, hopefully see something that goes back to that.
Speaking of the U.S., the threat of tariffs on Canadian energy, it's very uncertain, but high level, what are your thoughts?
Yeah, we've become used to reading and reacting to a lot of these things and pressures that obviously can hurt us, especially on the energy complex. But here this can hurt across the economy. And I think the starting point is there's a lot of variables at play, and it's a 25% tariff, has been commented, could come across. How does that really affect us? It's not just a 25% cost and a 25% revenue reduction, I don't believe, to our energy producers as a starting point. I mean, we've already had a commodity run that is somewhat displaced, some of the effect of that. Equally, there's a desire for our products, right? And so what will be borne by the producer? What will be borne by the customer? These are all variables that need to play out over time. And I think that, will there be an impact? Of course there will be. There's no question. But lots of variables that we have to take into account. And I equally think that you need good diplomacy across the board here and it's unfortunate, obviously, that we're in a transition period right now on the federal level. So we don't exactly have somebody that's at the table, let's say. But that being said, understanding what everyone's desires here are and having real political capital at work, but also somebody that's looking for the best interests of Canadians is going to be important. And then understanding those variables through time. And like I said, I don't think it's going to be as negative as, like I said, our producers just bearing all that cost. But we do need to understand more in terms of what that impact is going to be. And equally, it's what are the rules of the game as it comes to those tariffs?
How important is Canadian energy to the American supply chain?
Extremely, especially on the heavy side. So, give them approximately 3 million barrels a day. It's not something that they can replace. Trump's on record saying he doesn't want to take oil from Venezuela anymore. He's on record saying he wants to take the Strategic Petroleum Reserve back to his comment full. You can't do that without Canadian energy, to be frankly honest. So there's a little bit of push and pull here in terms of it's suck and blow, right? So I want to tear up these things and charge more, but we also need the product. And that's also which is going to mute some of the impact of some of these decisions, but equally, where do they fully understand the impact of everything that they're saying right now? I don't know that I believe that. And that's also where you need heads of state at a table and chatting through these things for sure.
On the other hand, the U.S. President's office is a very powerful position to be in, and it shouldn't be dismissed.
Absolutely not. And I think, unfortunately, Canada's put ourselves in this position, right?
Exactly.
Where, we have appeared as weak, right? And appeared as weak on the world stage. It's not just a U.S. dynamic. It's kind of across the board. And it equally comes back to what I was saying in terms of institutional capital. It's a reason that it hasn't been flowing into Canada. It's been flowing into other jurisdictions that are more promotional towards growth, promotional towards business, promotional towards economy. And we haven't been there. And so we're hoping, and hopefully that Canada gets aligned, right? Canada's been a bit broken here in terms of even, across the world, across the country, people haven't been aligned. We haven't been as proud, I think, over these call it almost the last decade. And we want to get back to that, right? And we want to get back to being extremely supportive of our people. And like I said, thinking Canada first, and that strength will translate into a lot of these things.
Well, that's an hour.
Awesome.
I really appreciate your time. Maybe to wrap up, like you said, you're not that old, but advice to a young banker out there. What would you tell them?
Work harder than the people around you. I think work ethic carries the day. You can learn as much as possible, but always be collaborative too. Don't bring somebody down to bring yourself up. Be very collaborative, and relationships are key. take in everything you can from the people around you, talk to lots of people, not just peers, seniors, and take the interactions with clients to heart. Because I have, even from a young age, the time spent with senior management, senior clients have always been something that have been a differentiating factor in Calgary and something that's really helped my career. And so take that opportunity and then take the opportunity to spend time in these rooms with some of the brightest minds in energy.
That's it. Unless there's anything else you want to add, we can end the conversation there.
No, that's perfect. Thanks, Trev. And thanks and congrats on all the success you've had with the podcast.
Thank you. Hello, listeners out there. Thanks for checking out the podcast. Hopefully the episode provided some insights. If you enjoyed the show, check out trose.ca where more episodes are yet to come. You can also subscribe to the podcast where your token of support is much appreciated. Until next time, happy coffee drinking.